and I'll let you take it.
Okay, cool. All right. Well, thanks everyone. And we'll send this out or we'll post it on YouTube like we have been doing. So yeah, I'm just going to jump into it. If I can get this to advance, there we go. Okay, so that's what we're going to hit on today. We'll talk about what happened at the Fed meeting on Wednesday, kind of what that means for the future, quick housing market update, and then Bliss and I will talk about what to do, what can we do in a crazy market like this. Okay, so quick reminder, the Fed funds rate is not the same thing as mortgage interest rates. It's, you know, we talk about this every time, but people still get confused by it. So it has an effect on mortgage interest rates, but it's not one-to-one. So yeah, there's your quick reminder on that. And that's what happens 8 times a year as the Fed decides what to do with that rate. And that's what happened for the 6th time this year on Wednesday. Okay, so what happened Wednesday? So another rate hike of 75 basis points or 0.75%. That's the 3rd consecutive one of 75 basis points. There was some early rumblings about a full percent, but that didn't happen. It was stayed at 75. So the Fed rate is now 3% higher than it was 6 months ago, which is pretty significant. That's a pretty quick increase, historically speaking. How did mortgage rates react? Kind of a roller coaster, but mostly bad. And then it got really bad. Right after, so how it happened Wednesday, immediately after mortgage rates got a little bit worse, but then by the end of the day, they were better. And then yesterday, the bottom fell out. It was bad. And then so far today, it's bad again. For an example, one of Shelly's clients actually, when on Wednesday, she would have been at 6% in her scenario. This morning, I looked at it, it'd be 6.375. So 3.75% in a day and a half, or yeah, a day and a half. So sometimes there's a big overreaction and then it calms down. So I'm still crossing my fingers for that, but honestly, I can't even explain why that happened. This shocked pretty much everybody. All the people that are way smarter than me thought that the market would react positively, or at least steadily, stay consistent. And there was a very small chance that it would react this poorly, but that's where we're at. All right, so what happens next?
Add one thing to that, Tyson, real quick.
Yes,
Something
absolutely.
I read this morning, actually about the UK, because mortgage rates, interestingly enough, are very tied to what happens in global markets.
Mm-hmm.
And overnight in the UK, overnight to us, they basically said, we're going to infuse more stimulus into our economy to help things, which, as we all know now, 2 years post-stimulus, that has a huge impact on future inflation. So the US markets looked at that this morning and said, well, wait a minute, you're going to make the global markets reach inflation points even quicker by doing this. So we're going to react even more negatively. And that's part of what happened this morning.
Yeah, that's a good point. There are dozens of factors that affect mortgage interest rates, but really the huge focus is inflation. So anytime something happens that looks like it will increase inflation, there's going to be a strong reaction. So thanks, Bliss, for pointing that out.
Thanks for giving you some great news, guys.
Yeah. So the Fed rate's now at 3.25%. In March, the target was 2% by the end of the year. So we're already well beyond that. In June, they readjusted that target to about 3.4, 3.5. We're getting close to that. And then yesterday, they said the new target is 4.25%. And there's 2 more meetings this year. So that could be, 50 basis points each of the next 2 meetings, which would be lower than what they've been doing, but who knows? I mean, but that's the new target rate. So they've changed their target rate twice so far this year. All right, the next round of inflation data will determine the next increase, whether they do 50 or 75 basis points. And that's significant because as we talk all the time, mortgage rates move in anticipation of what the Fed does. So now that they've kind of set that expectation, I would say if they do 50 basis points in the next meeting, that's a win. I think that would be good. If they go 75, I think that means possibly more bad news. But we'll just have to wait and see. So here's, again, just I've showed this chart before. It's out of date. I don't have it updated for what's happened this year. But this is the Fed funds rate historically opposed to mortgage rates. And why I bring this up every time is we can actually see declining mortgage rates when the Fed fund rate is still increasing or at least leveled out. So this, I don't know if you can see the mouse here, but this most recent rate hike, we're still in this period where the Fed funds rate is increasing and rates are increasing. I do think we're going to hit a tipping point eventually. I thought it was going to be this summer, along with most people, most analysts, but I think it's going to, Bliss and I were actually talking that we're both kind of realizing we're going to be in this for a little longer than we thought. I mean, we're already past where I thought we'd hit the peak and start going back down, but it still will happen at some point. When they feel like inflation is in check and they level stuff off, then we could see mortgage rates start to dip. So that's what we're waiting for. We just have to be a little more patient than we thought. Okay, inflation, this is a big one. So in May, we talked about this at our last meeting in June, or this last call. We were at 8.6 in June, in May, which was up 7% from March. Current inflation numbers put us about 8%. So that's good that it's improved, but it's still not meeting expectations. I worded this weird, below expectations. So it's still higher than where we expected to be at this point. So it's good that we're down a little bit from June, but it's still higher than the Fed thought based on the actions they've been taking. Hopefully we've seen the worst of it, but I also said that in June and it's gotten worse since then.
I have faith in you, Tyson.
And so the other side to this coin of what the Fed is doing is that it could cause a recession. And that would be bad for the economy. Mortgage rates actually tend to drop during a recession, but if we still have a high Fed rate, high inflation, it could be a weird recession where mortgage rates stay high. I mean, we've already seen a huge drop off in the housing market as far as sales and things like that. So the housing market is definitely cooled. But I think this next slide, okay, well, we'll get into where I think the housing market is going. So I think inventory is kind of going towards an equilibrium. There's currently about 6,000 listings. That's the entire state of Utah. There were nearly 7,000 in June. So it has backed off a little bit, but still better than when we had 2,000, right? A year ago. Okay, average days on market. I couldn't find good data about this or updated numbers. My guess is it's at least 20 to 25. I don't know what you guys think. You're in that more than we are. It was 14 in June. I could find good data back in June, but I don't know if anyone has any comments on that. It's definitely more, right? I mean, tell me if I'm wrong on that.
Chime in, anyone, or put in the comments if you've got more, if you have better data on that. But I would agree with what Tyson's saying. That's certainly what it feels like.
Yeah.
At least.
I mean, here actually I think it's in October, the Kempsey Gardner Institute at the University of Utah does their state of the housing market report. It's a really good in-depth report. So we'll have some better data on that soon. Price reductions, I'm sure you guys are seeing that. And then this is something that has been said recently, and I wonder, if you guys are seeing this, that single family sales will dropping, but townhomes and condos. I actually think what I'm seeing is that lower price single family homes are doing better because it's single family, there's no HOA dues. Those are the ones that seem to me to be selling better even than townhomes. And a lot of townhomes are, brand new and high association dues. But anyway, for what that's worth. Okay, this is what.
One of the things,
Oh, go ahead.
Yeah, go
Lenny.
ahead.
one of the things that I'm seeing is that builders of townhomes have bigger inventories now. So they're offering price reductions, and even on single family, I'm seeing price reductions.
Yeah, and that's just a necessity of this market, right? Is you got to sell the house and make it attractive somehow. Okay, so despite all that, we're still technically not in a housing crash. So even if home prices depreciate this year, we're still not in a housing crash. So I showed this last time. This is home appreciation since 2007. So of course we had those 4 years during the 2008 crash. And then since then, and this is Utah. And since then it's been really strong. 2022, we don't know what's going to happen yet. There were a lot of people saying we could still end up 15 to 20% appreciation. I temper that back. I don't think we're going to be that strong, but we'll have to wait till the end of the year to see how things end up. But it's been 86% accumulated appreciation since 2007. So things are slowing down. There's no getting around that, but it's not crashing like that. I've talked to so many people that are like, oh, I'm just going to wait till next year when I can buy a house for $100,000 less. And I just don't see that happening. Even if interest rates stay high, I just don't see it crashing. And most experts that follow this stuff really closely agree with me. But you talk to anybody on the street and it's all falling apart. Okay, so what can I do in a market like this? I have a few things, just a few quick things, and then Bliss, I'll let you take the wheel. But a few things I thought of talking to clients about interest rates, and Bliss, chime in on this part too. But rates are temporary, even though they might be high for a while. The average is still like 3 to 5 years that people have a mortgage, whether they sell the house or refinance. It's going to be temporary. Okay, new home buyers. This is just something that I'm sure you guys have seen and that I've seen quite a bit. They have sticker shock, right? New home buyers that maybe aren't following the market closely, but finally feel they're ready to buy a home, and they have that first conversation with the lender, and I tell them their house payment's going to be $2,500 a month. Like, that's surprising. Most new home buyers aren't ready for that. So we've got to find a way to talk to them about that, explain what debt to income ratio is. And I mean, that's really a lender's job to talk them through that. But if you can prep them a little bit beforehand, that goes a long way so that they kind of understand what they're getting into. And then we also have to face the fact there's just a lot of people that don't qualify anymore. That are going to have to wait this out. Either wait till they get a raise, wait till interest rates come down, wait till factors change. But if you have people coming to you, still have them talk to a lender, because then they at least know where they stand. Because the biggest problem is the one you don't know about, right? The boogeyman in the closet. If you don't know what it looks like, then it's scarier than it maybe really is. So there are some that just won't qualify. The numbers just don't work right now, but it still makes sense for them to talk to us and lay out a roadmap. Say, okay, if you made $5 an hour more, then you'd qualify. If rates come down 0.5%, then you qualify. So at least they know where they're at. Okay, and then one other thing, I won't spend a ton of time on this, but this is a pretty powerful tool. We've talked about it before. We did a Zoom call about it, a 2-1 buy down. And that helps buyers immensely. And it also helps your sellers if you can offer that, if you have enough room in concessions to offer that to any potential buyers, it could make your listing stick out a little more. So this is an example of it. I think I'll leave it there. If you don't understand this or haven't heard of it, just get in touch with us and we'll explain it. Okay, all right, Bliss. I just put 2 things on this next slide that we kind of talked about, but go ahead and add
Cool. So Tyson said some amazing things and I hope you caught it. One is the stuff about the market's not going to crash, yet we're all at you. I bet everybody that's on this call could raise their hand and say at some point in the last month, you've thought the sky is falling. I have, right? I feel like I'm bipolar when it comes to this. Like one minute I'd be like, oh, we're going to get through this. Everything's going to be great. And the next minute it's like, I'm never going to do another loan ever again. My phone's never going to ring ever again. And I think that is, that's kind of the part of being self-employed, right? Part of being on commission or as a real estate agent, right? There's going to be times when you doubt what you're doing. But here's what's going to happen in the next year. We're actually going to see a lot of people get out of the industry because they're going to realize that the bad times are not for them. Anybody, I know I see Kimberly, I see you're on the phone, Brooke, I know you guys have been in the business a really long time. For those of us that have been in the business a long time, we know that the bad times happen. So as I was pondering this, I was thinking back in 2007. That's when I had my first coaching client. So I used to own a marketing and sales training company, started in 2004. And in 2007, I started taking on coaching clients. Did it specifically with mortgage professionals. And I did that through about 2012. What I found in interviewing and coaching and talking with mortgage professionals across the country is that those that had been through bad times or started in a bad time tended to be on a much higher level when it came to how they ran their business. And I can't even really put that in quantifiable, this is what you should do. It's more of just a feeling, right? They had seen the market when it was bad. They had stuck through it. And they were just so dedicated to what they were doing because they knew that it worked. And when I say it could be lots of different things. So one of the things Tyson mentioned is, you know what, have your clients talk to us. Have them talk to a lender, even if they're not sure if they qualify, even if it's probably a good chance they don't qualify. Here's the cool thing. Heard this years ago from a really good friend of mine in the mortgage business. She said, I never tell somebody no. I just tell them not right now. And this is why, but this is why it's going to be a yes in the future, right? Your goal should always be to become a homeowner. And it might be not right now, but at some point we're going to get you to yes. And like Tyson said, it could be not right now because of interest rates. It could be not right now because of credit. Think of where we were just even 9 months ago, right? It was almost felt like no, because nobody could get an accepted offer for a reasonable price, right? We just traded that for a different type of difficult market. But those that stay in the business through this next, I would say, year, at least 6 to 9 months, right? I think we could very easily see it pick up in the spring and rates start to edge down, maybe summer. Think about what you're doing now and those people that you say, hey, let's have you talk to my lender just so that you're getting your ducks in a row right now. You now have somebody that trusts your opinion. They trust you as a friend to guide them through this. Then if you've got some systems and some ways set up that you stay in touch with them monthly or even more often than that, come 6 or 9 months from now, I'm assuming since everybody's on this call, everybody's planning on being in the business 6 or 9 months from now, just feel like you're starting to build this funnel of business for down the road. And be okay that there's not very much business right now, because that's just the way it is. But we're in an industry that you couldn't pay me enough money to go and do anything else, even when it's the hard times, because I know how satisfying that this career is. working with clients and helping them get into homes, right? So think back to those times. I know, Wendell, you just had an amazing closing, and you went through a lot to get Ryan. Oh my goodness, is that his name?
Chase.
Chase. Thank you, Tyson, for knowing my clients. Chase, yeah. I mean, right? You showed him a lot of houses, and they were not close to where you live, right? And he is so happy with how that turned out with that, right? So that's an opportunity then for both Wendell and I then to market to Chase, to then have him refer his friends and family to us who might not be at a point of buying a house right now. We really do have a lot smaller pool of people that are going to be buying houses right now, but you're at a point where you have the time to build a database of people that are going to be prepared and going to be excited to work with you and only you come next year, or when things start to improve a little bit. And that's just something that I feel super strongly about. One, I think because I am an optimist, right? And I'm not going to go anywhere. I am going to stay doing this. So I've got to look at it that way, but also history. This is my 31st year in the market. When I started, rates were at 10%, right? And I've seen it really, I mean, you saw Tyson's charts starting in 2007. We've seen some crazy stuff. It will not continue to go up and up and stay up. It won't. We don't know the timing. It is not the timing that even the smartest people in the industry at the beginning of this year anticipated, right? Nobody anticipated this. But also we have to keep in mind, nobody anticipated in 2020 and 2021 where rates would drop to. So unanticipated things can happen all the time in this world, right? And so I think just not losing sight of the long game of where you want to be and why you're in this industry, and really surrounding yourself with people that are enthusiastic about it as well, even though it's a tough time. They're willing to kind of walk that path with you and help keep you energized about it. Find an accountability apartment. That's what we all need. We need an apartment we can go to keep us excited about work. It just has Twinkies and Netflix anyway. So now I just want to hear from you guys. I would love for each of you just to give maybe one or two quick thoughts of what you're going to do over the next, let's say, 6 months to keep you from giving up, to keep your business moving forward. So go ahead, unmute, share with us. I would love to hear it.
I'll kick in a little bit there, Bliss, if you want.
Yeah, go ahead.
So when I got into business back in 95, there was roughly 600 real estate agents in Utah County. Now they're up to 3,300. It's just, there's just been so much the last few years. There's been so much low-hanging fruit, so to speak. Everybody and their dog jumped in to pick that low-hanging fruit. And as you know, I was quite successful in the short sale business in 08, 09 type of thing, which I don't want to do again, by the way. But one of the things that I found is that those who were able to stay in the business were the ones that were out of debt or did not have a lot of debt hanging over their heads. And that's one of the reasons that I was able to hang in there, is I just didn't have a lot of debt. And I wanted to be able to help people keep their homes if they could and things. But it's just one of those things we've got to keep doing, is we just have to keep pushing forward. And now it's called work for a reason. We've got work to do. We've got to get on the phones. We got to prospects, call our clients, and keep in touch with our clients, because they're all continuing to buy and sell. We just have to let them know that we're still in the business. A lot of people are going to be getting out. But I will also admit, this is the absolute best part-time job a person could have. You sell 1 or 2 homes a year, it'll be any full-time, part-time job.
Cool.
So,
thanks for sharing that. Shelly, do you want to share something?
Kind of like Brooke said, you're always touching your database. You're having client appreciations. I mean, we're coming to holidays, you have the pie events, you have all of it. And just ask them, how are you doing with this recession? I mean, really like take an interest in their life and literally do not bring up real estate at all. Just take an interest in what they're doing and be a normal person and have a relationship with them and just keep tabs on them. You know, that's it. Like, I think, yeah, you have to be smart with your money. And if you're not smart with your money in this business, I mean, you shouldn't be in it. Like, we make ridiculous sums of money and we should be smart in putting it away for when these things happen. So I think if you're in it for the long haul and you reach out to your clients, you do what you need to do, and you keep doing the things you need to do, it will all work out.
Perfect. Thank you, Shelley. Who else wants to share some insight?
I'm relatively new. I guess I'm probably the newest one that, you know, I hit my 3 years just this past month, but I remember in real estate school, they said, if you can last 3 years, you know, you're kind of on your way, but, you know, doesn't mean you're going to always, you're going to always face challenges. But I think what I'm finding is just kind of reinventing myself a little bit in looking for different opportunities. For me, I'm kind of learning the commercial side so that I can do other things and just kind of keeping track on what the commercial side looks like. So it's just kind of that reinventing ourselves. Not that you're going to change who you are, but just changing opportunities that you can have. So for me, that's what I'm doing, and trying to look at different ways that I can work.
Yeah, that's brilliant. Wendell, if you know of a good commercial loan officer, pass that along to me. I always have people asking about that, and the person I used to refer business to isn't doing it anymore. So just a side note, let's you and I stay in touch on that. Cool.
Absolutely. Thank you.
Who else wants to share? Kimberly, do you have any words of wisdom for us?
Are you calling me out?
I am, because you're a long ways from me. You can't smack me.
Yep. So I jumped off a cliff a couple of years ago and moved to St. George, and my idea was to kind of work with a builder like I've done before, and just kind of pipeline some jobs. It didn't work out like that for me, and what ended up happening, to kind of mimic what Brooke and some of the others have said about reinventing and making sure your clients know where you are and how you're doing and things like that. I'm in a vacation rental mecca in St. George, and that has become an opportunity for me to get referrals from my 22 years of business in Utah and Salt Lake County. And so not only do the Berkshire Hathaway office up there know that I do this, other agents have kind of figured it out too. And therefore is a new platform for a business I didn't know I needed or had until I decided to make something new for myself. And so I'm just totally grateful about, you know, the opportunities down here and the work that I have. And I am kind of a one-man band and a boutique kind of person. And so I do take on almost one client at a time, and it has served me well in treating them like superstar clients and kind of going over the top and making them, you know, my number one goal, because they are. And so that little niche has kind of served me well. And there will always be a reason to buy and sell real estate, no matter what the interest rates are or the time of year or whatever it is. And so you just have to be open for those chances, and hopefully, like Bliss, you said, hopefully the phone does ring. And so I just take it one at a time, and I appreciate the comments that the others have said about living within your means and living without debt and low overhead. And those are kind of the things that have made it work for me too.
Well, I think one thing I hope everyone heard Kimberly say is she moved to St. George thinking she was doing one thing in real estate, and it didn't work out, and it turned into something completely different, and now she loves it, right?
Yeah.
So we don't know what's going to happen in our business, but you're right, there will always be a need for real estate agents and mortgage lenders, right? Especially really, really good ones. So super amazing stuff y'all are saying. Anybody else want to share? I won't call you out, I promise. Don't be nervous.
Bliss,
Yes.
it's the other Kimberly here. Sorry.
Oh, did I scare you, Kimberly?
You did. You certainly did. I apologize. It was me that had the really disruptive phone call. I didn't realize I was not muted. But I just want to, I appreciate the things I have heard today. I always appreciate your updates. And I hope I'm not repeating something that was said when I had to take that call. But one thing that I've learned during these ups and downs that we can always count on in our industry is I tend to try and focus circle around if I haven't been doing as well and keep in touch with my past clients. Like just really baby them and reach out to them and take care of them, because you don't know what doors will be, open. And so I feel like that's always a good time for me to circle back around and make sure, because there's always a few that I haven't taken care of as well as others. And so it gives me a chance to catch up with that.
I love that. And I think your past clients and if you haven't been in the business very long and you feel like you don't have very many past clients, expanding the number of people that know who you are and what you do for a living. I know Shelly is super involved in Spanish Fork and Chamber of Commerce or different things in Spanish Fork, and she posts about it. Just becoming involved in different organizations and opportunities for people to just get to know you expands that database just naturally. So that's another good tip too. If you don't have, if you think, well, I can't reach out to my database that often, they're going to think I'm creepy. I don't have that many, just look to expand your database with more people that know who you are.
Liz,
So
can I say something about that? Like, I literally have people just calling me and falling in my lap, like just because I show up every single month and I give them what they want about Spanish Fork. And I tell people, I'm like, if you haven't made a reel about every park, every model home, every little thing, if you are a visitor in your area, you should make a reel about every single thing about your area. So you become the expert in your area. And that literally, it's not hard. It takes a little bit of time, but if you're in areas, make a quick video of the model home or whatever. I mean, there's so many things you can do to just become the expert in your area. And perception is everything, right? Like I could show that I'm like super busy and doing all these things and people love it. And they think I need to hire her because she's so busy, but it's really important to just be consistent.
yeah, I love that. Awesome. Well, thanks guys. I don't want to keep you any longer. We try to keep these to 30 minutes. But Tyson and I are absolutely available to help you with any questions you might have about this information or with clients, or if you ever want to do a quick video between us, we can always help you with that. Just let us know, and good luck with everybody. We'll be back again in a month or so to talk about the same stuff.
Yeah, no Fed meeting in October, but November and December.
November and December. Yeah, thanks, Tyson. And Tyson, will you stay on for a quick minute too?
Yep.
Hey, thanks, guys.
Thanks, Wes.